Crypto prices don't move in a straight line. They move in impulses and pullbacks in the direction they are headed. These directions form the basis of market structure. At the end of today's video, you will understand market structure whenever you look at a crypto chart. Hi, I'm Uncle Wealth. Welcome to the Satoshi African Academy channel. Now, let's talk about market structure. When it comes to market structure, the market moves in three basic moves. The first one is an uptrend. The second one is a consolidation, or we call it sideways movements. And the third one is a downtrend. These three form the basis of market structure. So, whenever you see a crypto chart, you need to understand that these three is what will help you to have an idea what it's doing. So we said the market moves in impulses and pullbacks. It doesn't move in a straight line. So in a textbook setting, what we are saying is this: the market doesn't do this. No. Instead, what you're going to see is that the market will do this. So, this is an impulse move. This is a pullback, impulse, pullback, impulse, pullback, impulse, pullback, impulse. And this pattern of movements is what we call an uptrend. We call this pattern of movement an uptrend. Now, for the consolidation pattern of movement, this is an uptrend. For a consolidation or sideways movement, we're going to see the market do this. The market will do this. Basically, we can say the market is ranging. And what is common about this is that we are going to see that the market is creating roughly equal highs roughly equal highs and roughly equal lows. So what we call this is, we say that this is a consolidation, or sideways movement, or a ranging market. If you hear any of these terms, it just basically means the same thing. Now, the third on our list is the downtrend. Now, in the downtrend, the market will do the opposite of an uptrend. It's moving an impulse, a pullback, an impulse, a pullback, an impulse, a pullback, an impulse, a pullback, an impulse. Basically, the direction of a downtrend is downwards, and it is very easy to identify. It is opposite to the uptrend. So this is a downtrend, and that's it. So we have the uptrend, we have the consolidation or sideways movement or ranging market, whatever I choose to call it, or however I hear it. It basically means that it's moving sideways. And then we have the downtrend. So this is the basics of market structure. Now, one other thing we said was that the market does not move in, we also said the market does not move in a straight line. In an uptrend, we will see the market creates higher highs and lower low and higher lows. So you see that's HL. While in a downtrend, we are going to see the market creates lower highs and lower lows. So all we're basically saying is this: if we zoom in to this our uptrend, we have our higher high here, this is our higher high, and then we have our higher low. So you can see this point here is our higher high, and this point here is our higher low. So basically, if you understand that, you see that this is another higher high, and this is another higher low, and this is another higher high and higher low. This is another higher high and this is another higher low, and this is another higher high. Now the reverse is true when it comes to a downtrend. In a downtrend, we will have a lower high and then we will have a lower low. We will have a lower high here again, and then we will have a lower low. So basically, this point up here is our lower high, and this point is our lower low. The same goes here. This is our higher high, and this is our lower low. Lower high, lower low, lower high, lower low, lower high, lower low. So that is it. So once you understand it, it makes things easier whenever you're looking at the chart. So on the consolidation chart, a sideways movement, you can see here, this is our lower high. This is a ranging market. So what you're seeing here is basically roughly equal highs. What you're seeing is roughly equal highs, roughly equal highs, and then we have roughly equal lows. So that is all you need to know about market structure. But how about we see them on the chart? All right, let's go to the charts. Now on this chart, we can see over here we had an uptrend here. This was an uptrend, price was going up, and then this was a downtrend. You can see this region was not really having a clear-cut direction, so we can see that as our consolidation before the next move. And what you can easily do is draw a price box for you to identify that region. And we had another consolidation here. Then a little peak, and then we had our downtrend here. And then we had our uptrend here. We had a little downtrend here. We had a consolidation here. Where price was ranging within this price box. Then we have an uptrend here, we have a downtrend here. So Once you understand this, you see how the market moves. Like I said, the market moves in impulses and pullbacks. So you can see that's been reflected. It doesn't just go in a straight line. You see, price came here, down, pull back, and then dropped down to here. So once you understand that, it makes it easy for you to decide the direction the market is heading. This was another consolidation. You see, on the chart, it's not a perfect rectangle. You just need to, it's basically subjective. You just need to mark out the area where price is ranging. Sometimes it can wick out of the price box and wick back in. But the main thing is that you notice that majority of the candles are within the price box. So that will be all for today's video. Now, if you've gotten value from this video, I'm encouraging you to subscribe to this channel, like this video, and share it. Turn on the notification bell so that when we post other valuable contents like this, you are going to be the first to get notified of our video. So I will see you in the next one. Bye.